Hey, what's going on, guys? And today I have this one graph of biotechnology stocks, this index. I don't know if any of you have been following the markets as of the last week, but biotechnology stocks, I noticed, they were a leader for quite some time. Last year they had a phenomenal year. I've talked about this in videos in the past as well. And what happened yesterday was an interesting move. The IBB NASDAQ index for biotechnology went down 4.75%. And what I noticed earlier in the day, the Dow was up roughly 100 some points, something ridiculous. And I thought, like, what the hell is going on here? Especially when I saw a leader in the market, which was biotech. It was down like 2-3%. I said, like, okay, this is quite interesting. If the leader of the stock market is going down, that, in my opinion, is either a sign of a correction, or this biotech bubble is going to burst, in my opinion, or it's already burst. See, what's happened is since 2009, it has had over a 300% move to the upside. The Dow, roughly 150 some percent. I think the S&P has had like a 300%, close to a 300% move to the upside. So similar to the S&P. But if you compare it to just other indices, biotech has done really well. And if you want to look at another factor here, biotech was really doing nothing for, I don't know, 10 some years. I think in the 90s it did have a bull run, and then it quieted down. It didn't perform as spectacularly as the financials up to 2007, 2008. And there's no real move in 2008. It didn't really go down significantly. And all of a sudden you've had a parabolic move. But long story short, when you start to see leaders as biotech, social media, and now 3D printing stocks, they were doing pretty well last year. They're doing bad this year now. So when I start to see these leaders do poorly, that's a red flag in my opinion. And as a disclosure, I am short one biotech stock right now, RGEN or REGN. I was using the BIS leverage ETF, but then I just got out of it because of the potential of decay, and I don't know if we've got to the top, so I said, you know what, get out of BIS, just get into one stock, REGN, and that's what I'm doing, just as a disclosure. And one of the reasons why biotech may have gotten hammered the way it did, well, let's read this headline. 3 U.S. lawmakers want Gilead to explain Sovaldi's hefty price. U.S. lawmakers have asked Gilead Sciences to explain the $84,000 price tag of its new hepatitis C drug Sovaldi, which is encountering resistance from health insurers and state Medicaid programs. The news pushed shares of Gilead down as much as 6% on Friday and sparked a sell-off among other leading biotech names on concerns that they may have a harder time pricing new medicines. Biogen fell 6%, Amgen dropped 2.5%, Celgene Corp was down 2%. Some health insurers, including the government's Medicaid program for the poor, are holding off on authorizing use of Gilead's new hepatitis C drug for patients. While the treatment has been shown to cure many patients for the first time, the payers are balking at the prospect of covering the therapy for millions of people at a cost in the billions of dollars. A letter to Gilead from Democrats in the House Energy and Commerce Committee included ranking member Henry Waxman asked for information on Sovaldi discounts on the recently approved medicines to payers and payments. So regardless of whether you agree with Henry Waxman's politics or not, what investors saw, they saw, Congress may give these drug companies more scrutiny, and then two, this may have told investors that, hey, you know what? Maybe the sector has gone up too far, too fast within the 5-year span. And a correction is coming, or B, the bubble has popped. I know Zero Hedge had an article about whether the biotech bubble has popped. And I'm not quite sure if we've seen the top, as I mentioned. So that's why I got out of the BIS ETF and I went in just short one stock, which has had I don't know, like a 20-fold move to the upside, which is ridiculous from 2008. I have to double check that number for REGN, but yeah, that's all I got to say is that when you start to see some leaders, once again, such as these social media stocks like the Yelp, the Facebooks, or excuse me, especially Yelp, right? That was considered a leader. As crazy as that sounds, it hit $100 a share. Now it's like hovering $83 a share. That was a high momentum stock. That's been getting hurt. Twitter was a high momentum stock. That's been getting killed. Now, if you want to go to biotech, slowly but steadily, we've seen a correction from the high of earlier in February of this year. So when I see all of this going on, I'm thinking to myself, a correction's on the way for some of these high momentum stocks, or the top is in for those type of stocks. That doesn't mean the top is in for all of these stocks. I mean, you still have all these traders with bullish sentiment. I mean, go to stocktweets.com right now and see the bullish sentiment in all these stocks. It's ridiculous. I mean, if you follow some of the things coming out of these traders' mouths, I mean, I know this one individual who has this one program, and he's said that Google is going to split, and then it's going to go to $10,000 a share. And I'm thinking to myself, okay, maybe now is not the time to load the boat and go long the stock market. I do believe late 2016, 2017, I am going to load the boat, most likely, because I do feel that we are overdue for a major correction. We've seen two major corrections in 2000, 2001, and then 2008, 2009. So that's what I'm looking for right now. And when people say go long the market, trader sentiment at an all-time high, especially when you look at all this margin debt, and people are forgetting about 2008, 2009, I'm taking a step back and saying that, okay, some of this is just crazy town talk. Anyways, guys, thanks for listening, and remember, it is dangerous investing in these leverage ETFs. I have made a lot of money in that, and I have lost a lot of money in that. So when I'm talking about this, just number one, use it as educational purposes, and B, just remember, if you're going short any position, just be careful. The stock market go much, much higher, and I would stay away from these leverage ETFs unless you're trading them for a few days, just as a disclosure. Or not as a disclosure, just remember. Anyways, thanks for listening. Talk to you later. Bye.